Hey, welcome back to the channel, everybody. I want to go over the PM Silver Bullet on June 2nd. This is after NFP. And so we're going to play it line by or candle by candle, and we'll be marking it up as we go and see how we could have seen it in real time. The dark gray is the 2 o'clock PM Eastern Time. Coming out, and we just took out the short-term low here, taken out. All right, let's pause right there. See a short-term high being cleared right here. Why do I not call that a market structure shift? This swing high didn't come down and take out this swing low. This right here is the swing high that was the catalyst that took out the swing low. So I'd consider when it breaks this the market structure shift. So this is a short-term high. Now, if this forms a fair value gap, we can take that trade. Okay, because if you pull a fib from here to here, this would definitely be in discount. There is a risk of it coming back down. So let's see if this forms a fair value gap. If it does, then I will be marking it on the chart. Okay, and it does. So let me throw that market on the chart here. Okay, now let's see what else happens here. So I'm looking for this market structure shift here to see if we get it or not. Let's see if we tap into this fair value gap. If it hits the fair value gap, I'll take it. Doesn't hit it yet. Now, if I did take this, if it did say that it did come down here, my stop would be below this candle, and that's a pretty good stop loss. So it would have been okay if I would have came down here, but it hasn't. So right now it looks like it's going to take out this short-term high there. It does take out that short-term high. Now wait a minute, hold on. Do we see a fair value gap here? We do. And it's right in there. It's right on it. Okay, so if it comes in here, we are going to take this trade right here. And let's see, what else do we see here? You also have a mitigation block here. Swing low, swing high, fails to take out this swing low, and then trades back through it. It comes back down, that's a mitigation block. So right now we could take our entry. Okay, but I want to see if it taps into that. So if it taps into that, we're taking our trade. And it does tap into that. So we take our trade right at the top there. Goes below this first candle. If we were going off the fair value gap, if we're going off the mitigation block, you could go one tick below here. But we won't. We'll go back to right there. So we got entered in right there. I'll take this off. You can see that's where we entered right here. So let's play this out. Well, let's just mark these off as I see them. There's a volume imbalance right there. If you're going to look for your draw and liquidity, it would be way up here. That's the weekly top of that fair value gap. So if you recall, we're in the middle of a weekly fair value gap at the moment. So really, you want to just aim for your 1 to 2, and if you get any more than that, great. But just low-hanging fruit. Low-hanging fruit would be right here. Would be 3. There's our 1 to 2. If we risk this, if we wanted to lower our risk, we could have, but we decided to go with the bottom of this candle. The first candle of the fair value gap, so that's what it is. So would I enter on this volume imbalance? No, I wouldn't. Because we don't have really a draw. Our draw is way up here. It's 15 handles above us, and we've already came a long way today, and it's NFP day, so I'm not taking that if it comes down to the volume balance. It comes back into this mitigation block and respects it, I would take another trade. I know that's only, 3/4 of a handle, but I already took a trade here, and it's been respecting it. If it comes back and respects it again, I'd take another trade. Volume imbalance is right there. Respects it, fills them. Okay. There we go. All right, right there, we are now break even, and we've taken our first partial above this high. So, you know, it's a risk-free trade at this point. And on these kind of trades, when your draw of liquidity is so high up there, you don't have a really clear draw on liquidity, I would be lowering my risk immediately as soon as I possibly could. So after 50% of my goal here, after 2.5, on this one after 2.5 handles, I'm moving up to break even. And I'm trying to take some partials off and then see what happens. And if it still respects this, I would still probably take a trade right here. If it does respect it, I probably would. You know, a candle closed, candle opens, it respected it. Because this was the market structure shift right here. This is where we know, hey, this is the swing high that took out the swing low. It finally broke that, and now it's coming back down. I'm looking, if it hits this, I'm taking another trade like I said I would. So I'd be buying there. And I would be, let's take this off, be entering, here, hold on, be entering right in here, throw those back on, and then we'd be seeing what happens here. And right there is where we got filled. Okay, that's how I would have taken that trade. And the reason behind it is, remember, we didn't have our market structure shift yet, so now we have it. Now I'm looking back. Be a fair value gap right here. That's too high up, too close to this. I want to have more of a pullback to reach the low-hanging fruit. And now that we've crossed over this, now my target would be this. So where would I be? The volume imbalance here? You could, but a stronger mitigation block and fair value gap, unicorn entry right here. If it comes back into that, I'd be taking that trade. And that's what happened on this example, and there you go. And for clarification purposes, these arrows are not execution arrows. They are merely showing you where you could have entered and where you would have gotten out to help you visualize where you would have entered and where you could have exited. So those are the two trades post NFP on June 2nd.